Today, we will work on how to do top-down analysis. Yes, this is the video that you have been waiting for. I'll start with the 4 hours chart and macroeconomy analysis, then move to 1 hour, 15 minutes and 5 minutes charts. In the final part, I'll show you 2 entry strategies with the 1-minute charts. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. If you love scalping and day trading or even swing trading and looking for special trading strategies, check out my free trading course. You can find the links on Google Drive or directly from my website, which is in the description. Okay, let's check this Euro-USD pair. Now, I want you to tell me what you see on this chart. We are using the 4 hours time frame here. No indicators, no volume, no drawings, no nothing, just price itself. Just by looking at it, you can see the long-term flow was bearish until October. You can see the price was breaking major swing lows. After the October range, the market shifted from bearish to bullish. But why? Why did this happen? It happened because of macroeconomics. As I said on Twitter a lot, if you want to be a trader, it does not matter even if you want to become a scalper. You must, I'm repeating, you must check macroeconomics every single morning. As you know, Fed recently stated that they will slow down about raising the interest rates. Many are already talking they will completely stop the interest rate rises in 2023. What does this mean? This means a loss of power of the dollar currency. You can already check the dollar index already losing power. So naturally, any pair against the dollar index will be powered up. See, all these macroeconomics. So you should be more bullish with any pair against the dollar. Do not worry, in 2023 I'll publish a weekly overview of macroeconomics for all asset classes like Bitcoin, Forex, gold, and US stock indexes. And we will discuss which state are we in, bullish or bearish. So we can look for more short or long trade opportunities. If you don't want to miss them, just subscribe to the channel and turn on the notifications. Now let's zoom in on this part and check the 1 hour time frame. Again, look at this. No need for any indicators, no volume and no drawings. By only looking at it, we can see that we are in a bullish form. We keep making higher highs. The dollar index supports us, macroeconomics support us. Everything is supporting our ideas. 4 hours is bullish and 1 hour is also bullish. Now let's get even closer and open the 15 minutes chart in this part and start looking for entry positions. I think many of you are seeing this amazing support and resistance flip area. An extremely strong break followed by a giant imbalance. These are incredible areas to look for trades. Again, let's focus on this little part with the 5-minute chart. As you can see, we keep going lower and lower in the time frames to find better trading setups. Now, in this 5 minutes chart, there is a huge range. However, in my opinion, there are 2 ranges. The one on the left actually turned into a power of 3: accumulation, manipulation, and the expansion. And the range on the right still keeps going. You can easily see how the range keeps pushing the price up and down like a pinball. Let's get close to this range. Now, I want you to pause the video and identify the 3 tap concepts at the bottom and the top. Yes, these are obvious 3 top points which you can find hidden supply and demand areas. Let's focus on the bottom part. Why? Because we are in this massive support resistance flip area which comes from the 15 minutes chart. You can see the clear deviation happening at the bottom and the considerable swing failure pattern. You can also notice the hidden demand area from the 3-tap concept, giving us a proper entry area to look for trades. Now I want to pause a second here. The swing failure pattern is just a concept, a pattern. It is not a rule that must happen all the time. When I look for liquidity sweeps, I mostly focus on after stop loss are hunted, how hard and powerful the price is rejected. If it makes a very strong and high quality break without any rejection, it is less likely to be a stop hunt. In this case, you can easily see how powerful rejection is. It just grabs the liquidity and moves back into range very quickly. This is a proper liquidity sweep for me. Now let's go down to 1 minute in this demand area and try to scalp this chart as much as possible. Now the most common question that I get every single day is how to analyze charts from high time frames to low time frames. As you can see, we started with 4 hours, then 1 hour, then 15 minutes, after that 5 minutes. Now we are at the 1 minute charts. It may seem complicated, but it is not. I already analyzed higher time frames for the day. Now I can look for many trading opportunities with 15 minutes or 5 minutes for day trading. Or I can use 1 minute for scalping. If you are a full-time trader, this is how you should be trading. Now let's see. Before even taking a trade, we have to look for if there is anything that may pull the price up, any target. You can see the imbalance areas above. A possible zones may pull the price to balance itself. Also, these untaken liquidity swing points are great targets. Okay, you can see the market structure break right here. This is actually a kind of weak break. I am not a fan of this kind of breaks. However, if you watch the ICT mentorship, it takes a lot of trades like this in 1 minute charts. Because 1 minute charts are very noisy, it is not possible to find quality breaks all the time. When you draw your premium and discount zone, you can notice how the price pulls back to EQ point and quickly rejects. Now let's assume, with the powerful rejection, I take this trade. Where would I put my stop loss? You can see the demand area below, the order block. At this point, you have to calculate your risks. Because later on, the price can do this. It can easily come back down, taking more power from this demand area. This is where I would place my stop loss. I have to think about possible pullbacks in this area. Let's assume you missed that entry. What else you can do? We can use our premium and discount zones again. Or you can use the Fibonacci tool, all the same in my mind. But this time we have a much better entry area, with the imbalance right below the EQ area. This is a possible trade to take right here. However, you can see the other imbalance right below it. This is a very common question. Which imbalance should I wait for? The answer is unknown, but we can do risk management. If I take the first imbalance, then I have to place my stop loss way below possible. Why? Because later on, price may pull back and try to balance the second imbalance below, and then go up. Furthermore, there is the fresh demand area, the extreme order block at the way bottom. And the price can even pull back to that zone to power up. All these 3 cases are possible. So, I will either take the risk with the largest stop loss, or I will set a limit order to second imbalance or extreme demand area and accept the reality. I may miss the trade. In the end, trading is all about making decisions. Some of them will work, some of them will fail, and some of them you will miss. There is no certainty in trading. Okay folks, we finished 3-tap concepts. I think everything is all clear now. How to do high time frame to low time frame analysis. All these trading methods are usable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope subscribe to the channel and like the video. Thank you, please take care and see you soon.